MIT report last week said that 95% of companies' AI pilot programs have not rapidly boosted revenues. But Morgan Stanley is playing the long game here. Writing the S&P 500 alone could see as much as $16 trillion in market value gains as AI adoption continues over the next few years. So which sectors will see the biggest gains of that $16 trillion? Joining me now is Byrd, Global Head of Thematic Research and Sustainability Research over at Morgan Stanley. Stephen, this is a fascinating discussion because it is very much about figuring out which industries are going to be the most impacted. Which will they be?
Yeah, thanks for having me on, Tom. Really appreciate it. Quite a few sectors. What's interesting is you might think that higher tech sectors would be the biggest winners, but when you look at relative to the amount of income that companies produce, it was interesting that it was a lot of lower tech sectors that were the biggest relative winners. Areas like consumer services, capital goods, a number of manufacturing-related industries, some healthcare-related industries that had the biggest benefit. Some of those benefits, when we look at full adoption, are greater than 50% of these companies' pre-tax income. So it is very big, though. To be fair, you mentioned the long game. This is the long game. This is not next quarter. This will take multiple years to really fully see developed.
The long game in the U.S. economy has also been this kind of evolution, if you will, between manufacturing, industrial type applications, yes, and service-related industries. So as you can best project, Stephen, how this AI trade plays out, what exactly does it do to the balance or tilt of the U.S. economy with regard to services versus goods and production?
It's a great question. I think that what we're seeing from our analysis is that embodied AI, that is, robotics broadly, that will be enhanced with AI, can have a huge impact on the United States competitiveness of manufacturing. So, for example, when we look at the fully loaded cost of a robot in the United States in a factory, that could be in the range of $5 an hour. Much, much, much lower than the average U.S. factory worker. Now, there's an obvious concern about the employment impacts. And what our work suggests is that the degree of employment displacement in areas where robots can have a role is greater than versus, say, agentic AI, that is software, where we see more cases where that will augment humans rather than automate what humans do. So we found that at about a 20% penetration level of robots in U.S. factories, the landed cost of products produced in the United States will be the same as a product manufactured in China and brought to the U.S. So that is absolutely huge, and that can change the mix of our economy in the United States.
Where will we see the biggest impacts first? Is it going to be in autonomy and robotics, or to simply put it, will it be in that kind of agentic AI area where in the coming months and years we will all have virtual butlers doing all the work for us and interacting with each other as opposed to person versus the robotics trade?
It looks like robotics is going to take longer, mostly because, frankly, we just don't have enough robots being manufactured. That's certainly the case in the United States. We're watching China and a few other locations very carefully because the ramp up is really impressive. But Tom, to your question, we just literally won't have enough robots. If we did, what we see is a lot of use cases in a bunch of heavy industry in the United States. What we will see, to your point, would be more agentic uses, everything from software and coding to in the legal profession drafting documents. It's a pretty wide range of helping you with your travel plans. A pretty broad set of use cases that is fairly gradual and it's going to hit a number of industries.
And as you look out at the types of companies involved here, are there specific ones that you are focused a little bit more on that could be early beneficiaries versus ones that are later stage?
Well, I think any business that has a lot of services, a lot of logistics, we see a lot of benefit there. So a bunch of consumer-oriented sectors, some healthcare sectors. Dom, I was really blown away. About 2 weeks ago, Microsoft showed that their latest AI tool could diagnose patients at much greater accuracy than the best human doctors at much lower cost. So I think we'll see that in healthcare as well. And then given what we see as this bullish backdrop in terms of the value of AI, it's the infrastructure players as well. That's where I came from before I did thematic research is power. And we see a lot of plays in the power sector being the keys to the kingdom in the sense of freeing up the power necessary for all these data centers.